Hello everyone, I'm Pankaj. I welcome you to this series of short but power-packed discussions on various topics of personal finance organized by Ladder7 Wealth Planners Pvt Limited. It is on the eve of second edition coming out of the book If God Was Your Financial Planner written by Mr. Suresh Sadagopan. For our today's discussion, we have with us Mr. Anupam Gupta, who's the host of India's leading podcast on personal finance, famously known as Paisa Vaisa. And he has also authored a book, The Wisest Owl, which shows you the 7 steps to manage your personal finance. To have this discussion with Mr. Anupam Gupta, we have with us Mr. Suresh, who is a managing director and principal officer at Ladder7 Wealth Planners Private Limited. So Mr. Suresh would be asking questions to Mr. Anupam on investor education initiatives that he takes and he feels appropriate to be taken by others like registered investment advisors and other fraternity people. And also he will, share with us his thoughts on the advisory profession. So I would like to ask Mr. Suresh to lead this discussion ahead. Mr. Suresh, over to you.
Yeah, thank you, Pankaj, and thank you, Anupam, for being here. Thank you. I think we'll have a good discussion on various things. Let me start with the first thing. That is, you have a wonderful, rich work experience as an investment research analyst and a consultant in certain marquee organizations before you came over and started doing this education initiatives. Um, do you feel that people, I mean, there are a lot of people who come to us saying that we want to directly invest in equities. Do you feel that investing in equities is a good idea, or investing probably in a managed product may be better proposition for most people? I'm starting with something slightly off the mark, but yeah, over to you.
Yeah, Suresh, first of all, congratulations on the second edition of your book,
Thank you.
and thank you for giving me the wonderful opportunity to be part of this. So thank you for that. Yeah, I mean, it's interesting, right? Because a lot of equity and I used to be an equity analyst for the longest time. I think even they didn't have too much of an idea of where to invest directly into equities and how to. Of course, they knew how to invest, but you're right. I'm not sure whether investing directly into equities is something that I would recommend or suggest to people that I speak to. I would always say that you should go, first of all, of course, please consult an advisor. That to me is like the most important 4 or 5 words that I feel should be given to anybody, irrespective of their background and everything. That when it comes to their own money, they should always seek another more professional view. And a managed product, you call it a managed product, yes, whether it's a mutual fund, whether it's a PMS, would always be more advisable to someone who doesn't have the time and the resource to sit and track equities full time. So I totally agree with that view. That's what I follow myself for my money also. If I all my investments are as per goals, that's the one thing that I learned in my when I was writing my book. So if, for example, I am planning for my child's education, then that is definitely going to go into an into a managed fund in equities, because I started it when he was just born. It follows a 10-15 year cycle, and then I know that at a certain age, this is what people need. Now, what would have happened if I put this directly into equities? At that point of time when he was born, I was actually an equity analyst. I don't want to know the outcome of that. I'm very safe putting it into managed fund. So I am of the view that instead of investing directly into equities, one should go at least initially via a product like mutual fund.
Correct. Okay, good. You have written books like The Victory Project, and the latest one is The Wisest Owl, where you have also interviewed me. You have featured RIAs and their models and their individual approaches. What was your thought behind doing this kind of a book? Anupam, are you there? Anupam? Yeah. Not able to hear you. You are on mute, Anupam.
Do you want to do the first question again? Sorry about that. I just had a drop
Yeah,
in the internet.
no problem.
Okay, sure.
Yeah.
Uh,
One second. So I think we'll start from the first, if you don't mind, Anupam.
Yeah, no, of course. Go for it. Sorry about that.
Yeah, no issues at all.
Sure.
So yeah. Thank you, Pankaj, for the introductions, and thank you, Anupam, for accepting our invitation. And I really want to talk to you based on your rich work experience as an investment analyst and consultant in various market organizations. I want to know whether it is your view that people should invest directly in equities instead of managed products like mutual funds or PMS or any of those products. What is your view?
Yeah, congratulations, Suresh, on the second edition of your book, and thanks for giving me the chance to be part of this discussion. No, my view is very clear that it's what I do myself. I always go through a managed product. In my case, it is mostly mutual funds because I believe that I can't and I don't have the resources and the time to sit and track the markets and actively choose which stocks to invest. That is the first thing. The second thing is that I have worked with equity analysts. I was an equity analyst. That
Yeah.
was my day job. And I've seen that even at that point of time when I used to track equities actively, it was very difficult for me to think beyond the set of stocks that I follow. And even if you are setting up a equity portfolio, you would want to have a diverse set of stocks. I don't have the time, resources, and I don't think that most of us today who have day jobs which are quite busy, which are quite, which also are quite stressful these days, would want to sit and take out more time to, I think there are about some 5,000 listed stocks, out of which 3,500 are actively traded. Even if you look at the broader indices, those are 500 stocks in the NSE 500. So I just don't see the sense of actively going after that. Look at a managed product, whether it's a mutual fund, whether it's a PMS, and I think that is a much better route to investing in equities.
Correct. I mean, I entirely tend to agree with that. But a lot of people, even our clients, they keep saying that I would want to choose certain equities. I'm going to invest in blue chips. I will get better
Okay.
return. So that is something I keep hearing a lot. So I thought I will, as an investment, research analyst yourself, following these stocks, I thought I will probably get a view from you.
Sure.
And the next thing is, I mean, you have written books in the past, The Victory Project, and your latest one is
Yeah.
The Wisest Owl.
Wisest Owl. Yeah.
Yeah. So you had, you had invited a few of us. I mean, I was also one of those RAs who were featured in the book, and you had brought out our models, our approaches in terms of what we are doing for our clients. What was your thought behind this kind of book, this kind of an exercise?
It was simple, Suresh. I firmly believe that all of us, when it comes to our money or when it comes to even our health, we should consult professionals rather than. Okay, let me put it this way. At the very start, you might want to do DIY. Like, I'm someone who wants to lose weight. I'm someone who wants to exercise. At the start, it's okay. You experiment and you do your DIY and you figure out. But I think eventually, as you move on as a long term commitment to yourself, you should definitely take the help of an advisor. I think that practice is something that is still new to India when it comes to money. So, keeping that in mind, I thought that let me interview the what I would regard as the most veteran advisors in India. And when I say advisors, I mean very specifically registered investment advisors as certified by SEBI. Okay, because you know that today in our country there are all kinds of advisors, some of them who are free, some of them who have different models. And I think the best way is to go as per the law. The law says that the regulator is SEBI. SEBI says that the right person is RI. So I had a certain screening process, and that the logic behind doing that was let me talk to the people who actually manage money for a living. And when I say manage money, remember, I didn't say manage stocks, because if I were to say manage stocks, then I would have to interview the fund managers, which actually is even simpler, because if you have to interview fund managers, but that is only for stocks. Money is a much bigger framework because now we're talking investments, stocks, real estate, debt funds, fixed deposit, insurance. Now, which professional has the right experience and the knowledge to look at all products? RIAs, and that's what I found in my interviews also. there are certain products like insurance that can, the best of us have problems with it. So why not consult someone whose job it is, to advise you on a whole range of products. Okay. So that was my logic for approaching RIs.
Okay, okay, wonderful. So, I mean, advisory profession probably is in its infancy. It has been that way for quite some time. So, where do you see it going?
I think that, the IA regulations came in 2013. So now we are 10 years into the business, 10 year into the formal RIA practice. Although, as I wrote in my book, people like yourself and the others who are into it have been in it for more than 20 years now, you know. So I feel that the people who are there for more than 20 years have established credibility, who have established a reputation. And I think that will obviously progress the way that the base target audience progresses. Indians are going to go from middle class to rich. A lot of them, that progression will happen. And at some point of time, all of them will accept that I need an RI. So there is a certain path towards that. Now, will that path be linear? I hope it should. I think that there are onerous requirements that are pushed on the advisor, such as yourself, by the regulator. Okay. I don't want to get into the right wrongs of that because that is a separate discussion. But I think that there is definitely a market for one level lower, for people who say that I just want a financial plan. Give me that and I can move on. That is, I think, a quantity market. Okay, which probably the market itself will figure out a way to process that. But the paid advisory business, I think that has got a really bright future only for those who have serious time and, most importantly, Suresh, reputation and credentials to sit and handhold their clients throughout lifetime financial planning. It's got a good future provided people are willing to look at the longer term.
Yeah. So, I want to take up one of the things which you had mentioned, that regulations are slightly tight, and I have also heard from many people, and I'm of course one of those RAs, that regulations are too tight, becoming difficult to operate. So, what do you feel are the enablers in the regulation to revitalize the advisory profession, so that the number of advisors for a country like India can be in thousands instead of under thousand, which we have today?
I don't know, Suresh. I tried, I had to look at the NISM exams and I got very scared. I was like, I don't even know whether I will be able to even pass this. But this is India. All of us are very good at, what is called ratto and all that. So I think passing the exams is probably the easier part.
Yeah.
I will not try. But I think after that, the change in regulations that happens, and I think where is the advisor vis-a-vis other people in the same ecosystem? I think that is something that the regulator might want to look at. Most importantly, how do we get the practice of advisor to a larger base of people? I think the regulations in today's day and form and shape make the regulator correctly look at the interest of investors rather than broaden the base. So there are two very different goals. So right now, I think the regulator is focused on a certain set of investors and having the best possible regulations focused towards them. Whereas if I am an advisor myself and I want to broaden my practice, then I think the regulations are slightly more tighter for me in terms of number of people that I can hire, in terms of AUMs, in terms of commissions, in terms of fees and all, not commissions, sorry, in terms of fees, having caps, having limits. Now, an RI also incurs cost, and, compliance itself becomes a very big cost for them. Now, what all will an advisor do? So I think somewhere you need to make the advisory business into a practical and remunerative model for the advisor to broad base his number of clients. Because if you expect him to service the same number of clients and that client model is based on referrals, then I don't think that you're going to have that kind of growth. So I think the regulator is probably a few years away from broad basing the guidelines, which is I think what is required.
Okay. So now slightly moving away from the regulation, investors, I mean, typically we look at our clients and other people, they are a lot of times they are all product based. They believe that wealth can be created by buying this product or buying that product, and following some fad, and product which is going up, they have to buy. So do you see those kind of things in your financial education initiatives, and what do you normally want to tell them?
Yeah. See, the thing is that Suresh, we have to accept that India has a very young population. Okay.
Yeah.
half of our population was born after 1995. Okay. I myself am 51 years old. So when I talk to these people, I feel like I can't even connect with them. For me, simplicity is having few products, but having products I can understand. But that is because of my experience. I have gone through what they are going through right now, which is chasing returns. And if you've got this kind of an equity market, where you've got stocks which are going up, then there is an inbuilt hunger in doing this. And I'm sure that you remember back in 2000 when you had started your practice, there was no social media, there was no technology,
Correct.
and now so much of our time is spent in that whether we want it or not, we will be swayed into some direction. So I think, for a person to realize that chasing returns is not the goal of his investment portfolio, that is never going to be the thing. It's to have a long-term perspective and ensure that your goals are being met. Now, this and I know, but for people to reach that conclusion is a cycle. Let's hope that cycle happens sooner than later, because I think eventually people realize this chasing returns is not going to get them anywhere. It's not going to get them anywhere. They might double their money in 1 year, but if they lose half of it next year, what is the use of it? I think this awareness will come. Let's give it some time.
Okay. So you are doing your podcast, wildly popular podcast called
Yes.
Paisa Vaisa,
Yeah.
to percolate financial knowledge among your audience. What other initiatives can be taken? I mean, in your case, you are doing this podcast, which is one of the ways by which you are spreading the financial awareness. In your
Yeah.
opinion, what else can be done to spread the awareness and knowledge?
Well, that's a tough one. Are you talking from the creator's perspective or are you asking from the consumer's perspective?
Consumer's perspective, in what ways will they probably imbibe the knowledge from the
Lovely.
entire system?
I think that's a great question, Suresh. I think that you need to look at this. You need to look at the life cycle. So some of it could be parents teaching their kids, okay, which I think that awareness is slowly coming now, and giving kids the freedom to do that. So by the time the kids grow up, they'll already have a base of knowledge out there. And I think for adults, who are starting off their job, and this is a section I've dedicated in my book also. I think that they should take aside serious time to learn themselves. Now how they learn is something that I can't control, but my suggestion would always be books. You've written a book. It's great that it's in a second edition. I've written a book. I don't know. Hopefully people still read books. Well, if they don't, I think there is still a lot of very good content out there. On YouTube, and there's a lot of rubbish also out there. So I think that people need to be very clear on the content they consume to educate themselves. A lot of the responsibility has shifted on us. What am I learning about my investments today? Do I know how to change the address on my mutual fund portfolio? Okay. So I think that awareness is still not there. And for that, I think people need to be a little bit more alert, a little bit more vigilant about the products they own, the features they have. And for that, I think the only way for them is to put in that extra effort from their part. And of course, follow people like yourselves who write very often, who are great advocates of the advisory. So I think if people can have a structured approach towards learning, then I think we'll make a good start to the process that you just mentioned of learning more about money.
Yeah, financial literacy and education is very, very important. It's unfortunate that it is not taught in schools and colleges. I believe there is a beginning that has been made in schools and colleges now. The curriculum is also bringing in financial planning and financial education, I believe.
Absolutely.
So that's a very good start. I think from there, then they will have to graduate to maybe on their own reading books like what you have written, what I have written, and articles and podcasts and various videos and things like that. I think that's a personal initiative. I think we'll get there over a period of time. I think we all have to do our thing and wait patiently for the results to show up. So thank you so much, Anupam. Thank you for being
My
on this
pleasure.
on this session. So it is very,
Thanks for having
very
me.
wonderful having you here. Thank you so much.
Thanks for having me, Suresh, and all the best for your book and for your practice, of course.
Thank you.